Okay, I wanted to quickly go over some of the most common reasons why you might see a reduction in your tax refund from the prior year. So this is a very common question I get year after year, and the reality is it could be any number of different reasons. It could be a combination of a few or maybe just one. But what I've done is I put together a table here outlining some of the major changes, which is why you would see a reduction in your refund. So obviously, there's been a number of changes from 2021 to 2022, but I've pulled out some of the more common reasons why you might see a reduction in your taxes. So the very first one here at the top of the list is the child tax credit. Right, so we have the child tax credit, and then the component of the child tax credit that's the refundable piece is the additional child tax credit, or ACTC. So what's happened since last year? So in 2021, so this is when you were filing in 2022, the child tax credit was $3,600 per child if they were under 6, and then $3,000 for kids 6 and older. And one of the other changes that was implemented temporarily was the credit was fully refundable. So basically, the whole amount was considered the additional child tax credit. And they increased the age by a year. So if you had a child that was 16 years old or under, right? So under 17, they might have qualified as a qualifying child for this credit. Now, fast forward to this year, a lot of those favorable positions have expired, right? So now the credit reverts back to its previous $2,000 per child, regardless of age, right? So there's none of this under 6 or older provision. And the credit is not fully refundable anymore. It's only refundable up to $1,400. So that's another big change. And then the age increase limitation expired. So now, in order to get the child tax credit, the qualifying child has to be under 16. All right. Next big one was charitable deduction. So normally, when you claim charitable deductions, you have to itemize your tax deductions. And most taxpayers don't do that. They just take the standard deduction. Well, we had this temporary provision that said even if you don't itemize, you can still deduct $300 of your charitable cash donations per person. So if you're married, filing joint, you get $600. But that was a deduction in arriving at your adjusted gross income. So in many cases, if you donate to charity or to your church or another 501c3 organization and you took the standard deduction, you often just lost those deductions, right? You don't get to claim them. But we had this temporary $300 provision, but that's now expired. The third big one was the changes in the child independent care tax credit. So this is like daycare, childcare type expenses. So we had a temporary provision which allowed you to take a tax credit for up to 50% of $8,000 in childcare expenses. So basically a $4,000 credit. And then if you had two or more children, it doubled. And so very nice, generous tax credit. So basically 4,000 per child up to a maximum of 8,000 in credits. And the credit didn't phase out until you started making over 125,000 a year. So a lot of taxpayers benefited significantly from this credit. Now, fast forward to this year, a lot of these favorable provisions have expired. So you're going to get a lower amount of dependent care credit, even though the costs are arguably the same or even higher for you. So now the credit is only up to 35% of 3K in childcare expenses, and then double it if you have two or more children. And then the credits are phasing out for incomes over 15,000. So it's a slow phase out, almost down to zero, if you make what the IRS considers too much money. So this is another big change that we've seen from the prior year. The fourth one on the list, the EITC, so the Earned Income Tax Credit. And what I've highlighted here is just the EITC specifically for taxpayers that don't have children. Right, so the earned income tax credit is still pretty generous if you have earned income and you have kids. But if you don't have kids, we got a little bit of a bump in the prior year because what they did was they changed the requirement for ages and income. So in 2021, you could claim the EITC if you had no children and you were at least 19 years old. Now, in contrast, for the prior years and what it reverted back to, in order to claim the earned income credit, if you don't have any kids, you have to be at least 25 years old and less than 65. So that was the rule that was in place for many years prior. And so, as part of the relief from the pandemic, what they did was they lowered this down to 19, so a lot more people qualify. Well, that's not the case anymore. So if you had the EITC last year and you didn't have any kids and you're wondering why I didn't get it this year, this could be one of the reasons. The fifth one on the list is the recovery rebate credit, right? So this is part of the stimulus check payments. So the third stimulus check was at $1,400 per person, and then $1,400 for each dependent. Now, the checks were supposed to be issued throughout the year, right? But if you didn't get your stimulus check, you would claim it on your tax return as a recovery rebate credit. So that would increase your tax refund. Well, those are no longer, applicable, right? We don't have any more stimulus payments going out. So if you had a recovery rebate tax credit for the prior year, you're not going to see one for this year. And then lastly, this isn't necessarily a change in the tax law, but what I often see happen too much is changes in the amount of federal income tax withholding, and then ultimately that drives your refund or the balance owed. So if in the prior year you had a lot of federal income tax withheld on your wages, well, you paid in more, so you might get back more. If your federal withholding was lower in the current period, then you're not going to get back as much money. But it's not necessarily a bad thing, because what that suggests is that you didn't pay in as much during the year that you had to, so you didn't give the IRS an interest-free loan on your earnings, right? Remember, I know this sounds kind of counterintuitive, but getting a large tax refund is not necessarily a good thing, right? What that means is that you basically gave the federal government too much money throughout the year on an interest-free basis, and they're just handing you back money that's rightfully yours. So always double check the federal income tax withholding piece on your return, or not your returns, but your W-2s. And at the start of the year, when you work with your payroll company, that form W-4, that's where you would update your information to more accurately reflect how much withholding should be coming out of your paychecks. Okay? All right, so that covers it for this video. I hope that was helpful. Obviously, if you have any questions about any of these items, any of these 6 items here, please leave me a comment below. Happy to answer any questions I can. And as always, I look forward to seeing you again on the next video. All right, thank you so much, and take care.